Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri. I've been spending about 10 minutes here speaking with David Hunter, having a brilliant, intelligent conversation with him. He's the one having the brilliant, intelligent conversation. I'm just listening.
We both
And
were.
it was a pleasure just speaking with him. He's such a wealth of information, contrarian macro strategist with 40 years of experience on Wall Street. You can follow him at David H. Contrarian on Twitter. David Hunter is on the line with me. David, thank you so much for coming on the show with me today.
Yeah, Ken, if I could just correct that, it's at Dave H. Contrarian, not David. So.
Okay. Sorry about that. I don't know. I have that here on my notes.
So yeah, at Dave H. Contrarian, you'll find me on Twitter.
Okay.
But
Sorry
anyway,
about
thanks for
that.
having me. Yeah.
Should I? Yeah. All right, let's get into it. My goodness, crazy year 2020. We've hit a boiling point. So many different things. It's difficult to believe. It's difficult to analyze. I mean, we had global shutdowns, swift market crashes, and the fastest recovery in the stock market the world has ever seen. And of course, speaking about the markets, I'd like to get your thoughts on these markets hitting all-time highs amidst everything that we're seeing.
Sure. Yeah, if anybody told you back in January coming into this year that we were going to see this year do what it's done, I think you would have said, no way, you can't have all those things in one year. But we have, and I will tell you, back in March, I said we'd see a melt up this year, and I think that's exactly where we're headed. It's climbed a tremendous wall of worry throughout the last 8 months. You still have, I think, a reasonable amount of skepticism out there. Certainly, you're seeing more people talk about the market going higher and even melt up. I've used the term melt up for quite some time, going back even before March. But you are seeing people talk 4,000 S&P now and things that you didn't before. My target on the S&P is 4,500, and I'm not wedded to that. It could exceed that, and I think it'll be there in the next few months, could be the next couple months, because once it gets into the melt up phase and goes parabolic, you're going to cover an awful lot of territory in a short while. So that seems crazy to a lot of people because they look and they see an economy that's rolling over again. They see a pandemic that's worsening again. We get those numbers thrown at us daily about how bad the new infections are and hospitalizations, et cetera. And obviously it's global. So it's really hard for a lot of people to understand how you can be talking about extreme new highs at a time when things seem to be getting much more negative, and they were negative enough. But that's at least what I see coming. I think it is a combination of, as always in the market, tape kind of rules. So as this thing gains momentum, it begets more momentum, and it doesn't almost doesn't matter what the fundamentals are to a certain extent. People will start seeing the glass as half full instead of half empty. And there's $5 trillion in money market funds on the sidelines. So not that all of that's coming into the market, but there's plenty of fuel. Lots of hedge funds were negative and have fought this market all the way up. At some point, as it breaks out to new highs here, I think they get forced in. Lots of institutions have been, you see the mutual funds have been liquidating all year, equities. So you'll see that money come back in, I think, as investors go to mutual funds again, the equity funds. I do think in spite of this slowdown, there's still momentum. There's still an awful lot of money sloshing around. And I do think, in spite of the skepticism right now, I do think Congress will ultimately realize they have to get together on a relief package. There has to be another one coming. I think the Republicans still are caught in trying to be, and it's kind of a joke today, but trying to be the fiscally responsible side. And so they're fighting any kind of a large package. and I'm typically more of a Republican, but I will tell you the Democrats are probably more right than the Republicans right now in terms of what this economy needs. Yes, you've had a V recovery. Yes, there's savings has gone through the roof, um, and we have plenty of businesses that are thriving in this so-called Zoom economy. But on the other hand, as we know, lots of small businesses, lots of restaurants, lodging, travel have been hit very hard, and lots of other businesses that can't operate remotely. So there needs to be a relief package to take care of all those people that are out of work, all those people that are suffering because they're in industries that are suffering. And I kind of cynically say you've got Congress who's never missed a paycheck sitting on the sidelines judging how easy it is for people to get by in this, recovery. And it seems like they're a little bit clueless.
David, if you've seen one of these charts, these M2 money supply charts, from like the 50s till now, and you plot the gains from even the real estate market or just the stock market against it, they are virtually identical, just like a 6.7 annualized return year after year. So my general question is, are we seeing the stock market just a hedge against inflation when it comes to money printing? Is that what this is all about?
I wouldn't call it a hedge against that, because I actually think the inflation that's going to come as a result of money printing is still a few years out, at least the sizable inflation. I'm pretty well known for calling for a global deflationary bust in 2021. And it's a little hard to square when you've had the kind of money thrown into the system. I think the Austrians would struggle with that, because they consider the money the actual inflation, or the actual measure, what you label as inflation. And I say money leads to inflation with a fairly long lag. And you've got cross currents here, so you're going to have probably an uptick in inflation over the next few months, as oil goes towards 50 and maybe $55. Gold and silver finally get going, etc. Copper's up, ag commodities are up. So I do think we are going to see an uptick in inflation, but then followed by a deflationary bust, because globally, I think there's kind of a second wave of what this pandemic has caused in the overall economy. That second wave comes at us, and we see the insolvencies, et cetera. And I just don't think the policymakers are on top of this, either here or abroad. And I think this thing's going to sneak up on them, and all of a sudden we unwind quickly. So inflation, and I'm kind of jumping around, but inflation, I believe, will be a 2023, 24 story on the way to 25, 6, 7, 8. I believe we're going to retrace the last 40 years of disinflation that will ultimately end next year in deflation. I think we're going to retrace that entire move down from 20% inflation rates in the early 80s back to those levels again by the latter part of this decade. The money that's come in now is a part of that. I believe in the deflationary bust next year, you're going to see the Fed's balance sheet grow to over $20 trillion. So we're at 7 now, up from 4. That means there's a lot ahead of us. That's where the real inflation is going to come from. That's where the real rebound out of the pandemic is going to come from. And that's not until 2022, 23. So next year, I think, is not an inflationary year. It's a deflationary year. So in answer to your question about the stock market, it's hard for me to say the stock market's up discounting inflation when I don't think this is really the start of that big inflation cycle. I think it's more, which I've learned through 47 years of doing this, don't fight the Fed. Money flows when the Fed prints, money flows into the economy, or flows into the system. During the time when they're printing money, it's usually because of a recession. The economy is not demanding that money yet because they're in recession. So the money flows to the residual, which is the capital markets. And that's what happened this year. It's just it's an extreme example of what happened in 1974, 1982, 1992, 2002, and 2008. You know, it's the same story. The Fed is the lender of last resort. They come in when the economy is in trouble. The problem is this one's, you know, we're at a whole different level today than we were in those other cycles.
David, I'd like to unpack that a little more, if it's okay with you. This idea of the stock market disconnecting from the economy. I think a lot of people felt that this year with the recovery we saw. People, and while people are at home, you know, not doing anything, the airlines, the cruise ships, Disneyland, all these different things that were shut down, but yet stock market was recovering. Of course, you know, we can talk about big tech and discuss that in a different sector, but it's just this concept where, you know, maybe years ago, the more important figure might have been the GDP number, but now the stock market has become such a large figure in terms of how it represents our economy, a financial number. I mean, where it was a fraction of GDP, now it's, you know, much larger than that. So I guess this idea that, you know, does it even matter what's going on with the economy anymore? I mean, I know obviously that's true, but to the extent that it's so disconnected, I mean, people are asking this question. I mean, does it matter who's president? Does it matter what matters anymore if you're just going to have money thrown at the system and stocks only go up?
Yeah, I can understand the confusion. Obviously, we've had a year where, like you say, so many industries, so many companies are in trouble, and yet the stock market goes merrily higher. If you really break apart the stock market, though, what you're seeing is in many sectors very strong earnings, and so the market's being selective. It's the stocks that are going up are the industries and the companies that are able to transition in this pandemic and do pretty well. Obviously, the Amazons of the world, the Apples of the world are at the top of that list. But even in other areas, you know, companies have been able to do. Look at housing. I mean, housing has been strong, and we have a shortage of inventory, so the builders are strong. So it's not as irrational as it may seem if you break apart the market. And what happens is those parts that are doing so well are carrying the market to highs, and those areas like cruise lines and airlines and hotels and restaurants that are holding it down. You know, actually, particularly in the restaurant area, most of those are not stock market phenomena. Most of those are little mom and pop places, or certainly not public companies. And so you've got a small business economy that's suffering, and you've got a big business economy that is what the stock market represents, doing quite well. The problem with that is that I don't think Congress understands the difference. And as a result, they're really sitting on their hands. At least, you know, both sides are arguing they're both at fault. So one side's trying to be fiscally responsible when they shouldn't be, you know, when they should realize that, you know, we're in a whole different period. Pandemic's unlike anything prior to this. And the other side's playing politics. So between the two, you get no agreement done. And meanwhile, you got 20 million people out there whose $600 unemployment check stopped at the beginning of August and are sitting there saying, I can't pay my mortgage, I can't pay my rent, I can't buy food, I have to go to the food pantry. It's really a frightening situation for people because their representatives don't seem to understand.
David, if we can unpack a little bit of this idea of what's going on in real estate, there is a lot of nuance to that. You have what's going on in the cities, the exodus from the cities. You have a shortage of inventory, and maybe has to do with the fact that people can't get evicted. So and people aren't moving, you know, or they're not getting kicked out of their homes. So, I mean, what's I guess the mid to longer term scenario that you see happening and taking place in real estate, as right now it's seemingly booming?
Yeah, I would say we're in the last inning. of a real estate boom that's been going on for a while. And because so much of real estate is driven by interest rates, you've got interest rates down near zero and mortgage rates, sub 3. That's a big part of the phenomena as people look at a monthly payment and say, I can do better in a home than I can in an apartment. And so you're seeing, and there's limited supply out there. So it's a supply demand thing where the demand is picking up. And as you say, people are fleeing the cities. So that increases the demand at a time when there's not supply. So the prices go up. The problem is that if we get a global bust next year, and I should define bust as, what I define bust as is, and I've used the term for many years now, I see the word bust thrown around, market bust, et cetera. I'm talking about the economy. And I differentiate a bust from a depression in that a bust happens fast. A depression is drawn out like the 1930s were. You can have depression-like damage done to the economy, but have it contained within a 12 to 18 month time horizon because of all the leverage coming at it and things unwinding fast. So I think next year is a depression-like decline in the economy, all contained mostly within 2021 anyway. That kind of unwind will hit housing. I mean, housing, I think we're in the last hurrah of the housing boom. And I think the other side of that is first you get hit by whatever next year is. And then as you go through some sort of recovery because of all the money it's going to be thrown at the system in 2022, 23, 24, 25, you're going to see a big ramp up in interest rates. Not initially, initially you're coming out of even lower rates than we're at now. So it'll take time for it to build. But I think you're going to be at double-digit mortgage rates by 2025. If you have double-digit mortgage rates, you're going to have a big impact on prices because it's an inverse relationship. So I think we're in the last stages of this upside of real estate. And I think going forward in the 22 to 28 period, real estate's going to be trending down. And I know a lot of people think real estate is an inflation hedge. As I say, because of the interest rate relationship, if interest mortgage rates go from sub 3 to 12 or 14%, the prices are going to go inverse to that. So I don't think real estate's going to prove to be much of an inflation hedge.
Well, let's talk about gold. I mean, as we do this interview, gold is getting slammed. And a lot of this has to do with optimism in the economy, vaccines, all these different things that are short-term headlines. But gold is taking a little hit. I mean, it's coming off its high that we saw. And it's going into that trading range. I know people are starting to think, whoa, was that it? Was that the move we were expecting to see in gold here? And because of the way it's been kind of steadily falling below 1900, and then now it's getting closer to 1800, I think that makes people nervous, just the way gold is, right? So what are your thoughts on gold and silver? And I guess I'll add this, if you would have told me what we were going to see in 2020 with lockdowns and riots and money printing and the crazy pandemic, billions of people unable to leave their homes because governments are, I would have said $10,000 gold, right? I mean, you know what I mean? Like something crazy, I would see that as very probable because what you're explaining to me is crazy. Movie theaters closed, cruise ships, Disneyland. I mean, this is a crazy world. So sure, I could see a crazy high number in gold, but we're not really seeing that, despite the very impressive year we have seen in gold. So what are your thoughts here?
Yeah, we have to step back for perspective and remember gold was at 1460, I think, back in March. And at the beginning of August was up at almost 2100. That's a hell of a move in any year for gold. So it did kind of do what you say. I would take issue with 10,000. I don't think you can get there that fast, but certainly a move from 1460 to 2100 is a big move. And silver likewise went from, I think, $12 to 30, which is a huge move. And again, that's on coming out of a period where gold and silver were in like 8-year consolidations where, gold bugs were frustrated. Anybody that was in the metals lost money. It just was, it couldn't get out of its own way. So it had a great March to August run and has gone into consolidation ever since. I thought it would probably come out of that consolidation by now, and it hasn't. I think we're at the latter stages of, the end of that consolidation. I'm on record as saying that we're going to have another leg up in gold. I thought it happened before year end. Now it looks like it's probably going to be postponed, in terms of the ultimate target that I have postponed into early next year. But I still think coming out of this consolidation, you'll see silver at 35 and possibly higher, and you'll see gold up around 2,500 over the course of the next couple months. So if I'm right that this consolidation, this is kind of the last, let's scare people out of this with this last hit, I think you're probably going to be on your way by the time you get to December. So I've been wrong, for the last couple months in terms of expecting this to come out of consolidation sooner. But I don't see this as anything more than a high-level consolidation that started at the beginning of August. So and where we go from there, I suspect all assets, or almost all assets, except maybe treasuries, will be hit in the bust. A deflationary bust. We haven't had deflation since the 30s. Deflationary bust is going to be tough on pretty much all assets. Like I said, treasuries will buck that trend. Maybe the dollar will buck that trend from a lower level than this, and cash will hold up. But other than that, there's not going to be very many places to hide. So gold will, let's say we get to 2,500 on gold in the next few months. I think gold can backtrack, but I don't think it can get much below where we're at now. Maybe a little bit, but not much. And then I think it probably comes out of the bust faster than any other asset, because the Fed's going to be printing money like there's no tomorrow, and the precious metals will get the first response from that. So and I do think gold does see 10,000 plus this decade, probably 28, 29, 27, 28, 29. I wouldn't be surprised if gold's up there by then. I think silver can get to $300 plus in that time frame. So I do think we're in the early stages of a big new bull market in the precious metals, but it's going to be an uneven ride. You're going to have some volatile times on the way there.
So David, last question. As we see this overarching trend of bigger government continuing to strip freedoms and implement the things that they're doing, and our becoming more and more dependent as a society on government. Government becomes a larger percentage of the economy, and it just kind of self-perpetuates, eats its own tail as time goes on here. And what are your thoughts on, the direction our country is heading? I mean, we were talking about this before the interview, this ebb and flow of recession, depression, but that's happened. But at the same time, we're trending more towards big government that ultimately leads to communism and socialism and a third world environment. So what are some of your thoughts, especially in light of this epic 2020 year that we've seen?
Yeah, I would say, we have, up until recently, we've kind of gone along where Democrats win for a couple cycles, and then Republicans, and you keep things kind of in the middle. Unfortunately, it looks like we're nearing an end game here, and it truly is a case. When Trump was elected in 2016, you heard a lot about draining the swamp, and we're now finding out what that means. The swamp was a lot bigger and broader than I think many of us realized. It does include the deep state. It does include the bureaucracy in Washington. It does include, the Democrats, of course, but it also includes a lot of Republicans. And it really was a swamp that was geared towards moving us towards a new world order. And New World Order, I call code for a communist takeover of the world. I think people mistakenly think New World Order means, yeah, it's going to be more global trading and, we're one big world now. But I think if people understood what was behind that movement, you would find it's China, Russia, et cetera, looking to spread their wings throughout the world. The United Nations is obviously driven a lot by countries that don't agree with our politics. And I think that would be more of how we would take the first step, and then it'd go to even further control. Um, and unfortunately, there's a lot of people in this country in positions of power who naively believe the more naive view of New World Order and don't realize what it really means. So they're what the Communist Manifesto would call useful idiots. And I think that's what we're running into here. Donald Trump came in, and say what you want about his style. He came in with a view unlike any of the previous presidents in our modern day, certainly since Reagan, in terms of saying, I'm not a globalist. I want to, stress sovereignty. I want to drain the swamp. And what you saw this election is the huge pushback against that. I'm on, I'm probably on ground that a lot of people don't want to hear about, but I do think there was massive fraud in this election. And I do think that it remains to be seen whether it'll be uncovered or not before January 20th. I think people need to understand that what you're getting in the news is basically covering up all that fraud. It's not, when they say there's no evidence of fraud, it's because they don't want you to look. All you have to do is open your eyes, look at some alternative information beyond the mainstream media. And it's pretty easy to see, and certainly intuitively, if you look at how this election ran, it doesn't make sense. So whether that ends up anywhere in terms of overturning the election, we'll see. I have no opinion on that. But I will tell you that Trump really is the only thing standing in the way of draining the swamp and a move that will take us towards communism in this country in a matter of years. This is not decades and decades away. Things are changing rather fast, and it's concerning. And I feel, unfortunately, not most, but certainly half the country kind of gets their information from sources that are not necessarily very enlightening, and you need to look elsewhere.
Yeah, it's so true. I mean, if we posted this interview on Facebook, it would have a little disclaimer under it about what the elections and what they want you to think, and it's just so crazy to believe that we live in a world with such censorship and this nanny controlled environment. And again, we might have had this conversation a couple years ago and seen things that, because of critical thinking and the fact that we're interested in it and we've gone down different rabbit holes, we've had conversations about it. But this is now becoming mainstream knowledge that the governments lie to us, and
Yep.
that there's a lack of trust going on. And so it's a problem, but it's also very positive that it's being exposed for what it is, because then that gives people an opportunity to rise up until it's just tyrannical. Hopefully we don't get to a point of that extreme, but nothing would surprise me. I would not have guessed that governments would have said, hey, you need to stay home for Thanksgiving and you can't run your business, and all these things that we're seeing here in 2020. Nothing would surprise me at this point. The freedoms that I feel that I once had, I don't have that anymore. The interactions with people when I walk out of my house now is uncomfortable. If I have a mask on outside, people are not connecting the way they are. Or if you don't have a mask and someone's walking by you, they might look at you funny and say, hey, why aren't you wearing a mask? And we've created this, we've pitted each other. We're pitted against each other, unfortunately, in so many ways. And it's such a odd dynamic that we're living in now. So David, Hunter, everyone, thanks for coming on the show with me today, David. If people want to learn more about you, the work you do, let them know where they can go and what they can expect to find. And of course, share some closing thoughts as we round out this interview.
Sure, Ken. Thanks. Yeah, they can reach me again at Twitter at Dave H. Contrarian. And I also have a letter that I offer by subscription that they can reach out by just DMing me, direct messaging me on Twitter for that. It's not a freebie, so you'll have to decide for yourself whether it's worth subscribing or not. But and just final comment, I would just say people need to look beyond the mainstream media, think for yourself, do some critical thinking. It really troubles me a lot that you can have groups like Antifa out there wreaking havoc in our cities, and I hear from people that get most of their news from mainstream media, and they say, no, I don't think there's much going on there. It's being exaggerated. It's not being exaggerated. We have anarchy in this country, and it can be put down. It's it's still minor at this point relatively, but there are an awful lot of politicians standing against that. So I would just encourage people, don't listen to me, don't, but just look for sources out beyond your normal sources, because I think you'll find there's a lot you're not getting from the mainstream media.
Yeah. Yeah. And I totally agree. And, a lot of times I think people feel like, oh, we're just looking for biased information. But when you look at what the mainstream media is putting out, they're making a lot of claims and assuming things, speculating on things without the facts. I mean, look for a news source that is actually going to analyze factual information and not make assumptions without facts in front of them. And that's what I think needs to start happening, for people to start listening to news sources that cover facts and make instinctual guesses, if you want to do that, based on those facts, not based on what they want to believe. So, David, thank you so much for coming on the show with me today.
Sure, it was a pleasure, Ken. Thank you.